Okay, so I've got Patrick with me at the moment. Patrick Karim, good to speak to you.
Hi, Kevin. Always fun.
So we thought we'd take a look at, well, actually, I'm trying to record this for the first time so I can upload it. So it's my first attempt at recording one of these with Patrick, so I hope it goes okay. We've got some charts to go through, and it's a pretty interesting point just ahead of the US elections, which are taking place next week, of course. And it seemed like a good time to try and draw a few bits of the jigsaw puzzle together. So me and Patrick have just been looking at this chart here, which I've been putting together over the last couple of hours, and just draw your attention to some bits and pieces on here. So what I've marked with these red circles, these little red areas here with the numbers, are the US elections. And obviously people talking about how the US elections might affect the price of gold and silver and commodities and so on going forwards over the next few months. So what can we sort of glean from this chart? I think you've probably heard me talking about gold's 8-year cycle before, and you can see the 8-year cycle marked at the bottom here with these sort of semicircles. Every 8 years you get a low point in the price of gold, and it coincides exactly with the US elections. So election here at point number 1, there was a 8-year cycle low. Next 8-year cycle low here at point number 3, which was a US election. Another one here at point number 5, that was another US election. 8 years later, point number 7, there's another low point for the price of gold. And all the way through point number 9, that was the correction in 2008. That was another US election right in there. And so it goes on. Point number 11, 2016, another 8-year cycle low in gold. And here we find ourselves at point number 12, which is in between, obviously in between 11 and 13. The 13 is the next 8-year cycle low in gold, which I've been sort of saying late 2023, early 2024, but in actual fact, of course, the US election is going to be in November 2024. So worth bearing that in mind for the 8-year cycle low in gold. But obviously what's of interest to us is point number 12 here, and are there any elections here that we can look back at and compare it to try and get an idea of what might happen with the price of gold. And for me anyway, Patrick agrees with this, but point number 8 has a lot of similarities because we'd had a bear market low here at point 7, like we had a bear market low here at point 11. Both of those were US elections. And then 4 years later, you find yourself at another US election during the early stages of a bull market in precious metals. So what happened at point number 8? Well, let's zoom in and have a little look. So here we are in 2004, and point number 8 on that chart. The price of gold had been rising as we went in towards the election. The election is marked in 2004 by that black arrow. Gold price rose just a little bit more, another $20, $30 or so, and then it went sideways for a period of 8 months. Then it broke to the upside, and of course we went to a peak of over $700 at that point there.
Kevin, just that peak after the election there was that an all-time high at that moment in the 2000?
Well, we can go back to the previous chart and have a look. So just after the election there, and you can see it wasn't quite an all-time high, but it was the high point at that point since the bull market started at point 7. So comparing to where we are now, clearly prices moved up and up and up since then, and we have had an all-time high in the price of gold, which we're now back testing the breakout in the $1,800 area. So trying to pull a few things together, what we're seeing is classic chart action in terms of the retest of the breakout area, monthly defined breakout in that sort of 1800, psychologically important 1800 area. But going back to this sort of zoomed in image here, the price had been rising into the election, and there was a negative reaction for a time after the election before price took off to the upside. So going back to that larger chart here, price took off to the upside because we were in a bull market. We'd had a major 8-year cycle low at point number 7, and we're sort of progressing upwards in the start of a new bull market, which is what's happening here, of course, after point number 11. Given that we've been falling and price has been dropping into this election, my expectation would be that would be a bullish pullback, which will resolve to the upside. But whether it's very rapid after the election or whether we need more time to see this sort of even a handle sort of building out into the early part of next year, which is a possibility, that we could come down here to $1,500–$1,600 even, build out a handle to this cup formation before taking off. That's a possibility I wouldn't entirely rule out at the moment, but I think that the stronger likelihood is that we see stimulus talks after the election, liquidity injected into US markets, and a very rapid rise in the US stock market and in the price of gold and silver as well. What do you think, Patrick?
Well, yeah, so there's probably a lot of watchers or viewers that they're looking, okay, Kevin's pointing to number 8, but let's look at the other even numbers. That's like the first thing I did. Look at Pat, the election number 10, it went down after that. Election number 6, it went down. Election number 4 went down. Election number 2. But then after that, me and Kevin, like we kind of ironed things out, but the weight of evidence, like we're in an uptrend. It's different. The starting point from those from some of those points, where the arc also, I've noticed like the arc is building very nicely where we are at number 12. We're above all-time highs. We're retesting it. So in the weight of evidence, like it gives you probabilities that the next possible move will be a continuation of that arc. And the only thing I see, I know sometimes like 1,500 now that's possible, but what I won't like to see, because in an uptrend, usually we stick above, especially gold above its 1-year moving average. So 1,500 would really be a spike down below that. And it would break my heart to see that there, but
yeah, that's a good point, Patrick. So that's another piece of evidence to suggest that we're not going to see that scenario unfold. The elections which took place in between the 8-year cycle lows, so for example, election number 2, that formed the secondary peak on that parabolic bull market top, which was a bit like number 10, where we saw the secondary peak just after this sort of parabolic rise, the final part of the bull market here. So points number 2 and 10 are very analogous, very similar. Points number 4, that occurred in the middle of that 8-year cycle, and price was declining as we were in a very large consolidation pattern, which was eventually to build out this large arc formation. And the same at point number 6. It was in the middle of the 8-year cycle, and price continued to trend downwards for the same reason, until we sort of made contact with and built out the edge of this arc pattern, which then confirmed the sort of start of this bull market when we broke out here in 2002, I think it was, and set in motion the bull market that took us up to a couple of $1,000, which we've now, of course, exceeded, which sort of signals very strongly, that we're in a developing bull market that's going to take us to goodness knows what sorts of values up here, in light of all of the debt and the money creation and everything else that's going on in the United States. Kind of hard to get your head around where we might be heading. But on that, if we look at this is a gold chart at the top here, which is kind of minimized at the top of the picture. If I just minimize a couple of these windows here as well, and get rid of this one, if I can remember how to, Patrick, you might have to remind me. What's that arrow there, isn't it? There. Yeah. Okay. So we've got the gold chart on the top here again, but that's not really what we're looking at. What we're looking at the bottom is the ratio, the Dow Jones average to gold ratio. And you can see that over the last 20, 30, 40 years, we've actually formed a double bottom formation within this huge arc with two smaller arcs. So that's a bullish pattern within a bullish pattern, if you like, and a strong indication that we've marked the low point for this ratio. What you can't see until I zoom out a bit is just where we are in this. You can see that the Dow to gold ratio was sort of more or less 1-to-1 back here at the start, and we've sort of dropped all the way back down to sort of 0.04, that kind of thing. So there's a long way to go back up over the coming years of this bull market. First target area is this sort of zone of horizontal support and resistance, which I've marked in here, which we could reach in the next sort of 12 to 18 months or 12 to 24 months before we start seeing that pullback into the 8-year cycle low. So it'll be interesting just to see how far this moves and what combination of the Dow, movements of the Dow and gold sort of lead to this value going up. I think the most likely scenario is that the Dow goes up, but gold goes up faster. And the reason for that is money printing, money creation, liquidity injection. What do you think,
Kevin,
Patrick?
I'm noticing sort of like I noticed. I remember. I think you taught me that the entry, the distance from the apex of the arc, the entry is often, you could almost measure move. So I see, let's say, where that red line's dropping in 2013. It's like, let's say, a quarter of a box away.
In 2015, did you say?
Yeah, 13. Yeah, if you could like really zoom on that. Yeah, right there. So that distance from the apex of the arc to the red line when it starts really like dropping. Ah, perfect.
Down here.
Yeah, so there, that distance from on the top line.
You're talking about a sort of
yeah, exactly.
Symmetry move.
Yeah, symmetry move, exactly. So we could like kind of time the exit there.
Which is what happened, of course, with gold. We had a reverse symmetry move, and it's kind of controlled by this arc anyway, because there's a limit, time when the arc runs out.
It did the same thing for the smaller arc on the left. I'm noticing right now.
It did. Yeah.
See where it drops in the 96 or 5.
Yeah.
In the arc, it's pretty much the same distance on the explosion out in 2008 or 9 there.
It's almost like conservation of energy in physics, the energy that's sort of not conserved, but if you imagine this as something physically dropping into here with force, the rebound it takes it back to very close to where it started in the first place, and the energy that has been lost as this comes in here is then regained as it comes back out again. So you're very likely to see the ratio rebound back to these sort of levels, which you'd have to do some maths to work out some theoretical values for down gold that would that would allow you to have that ratio. But I think it may well give us some numbers for gold that we can't really get our heads around at the moment. So I'm not going to get too excited, but it's mathematically that possibility is there that we're going to see gold prices much higher than we currently anticipating.
So 21, 22. So that'd be the 20. Like that's that famous question we always get. When's the peak before the next cycle starts low? So that's like another weight of evidence that if you follow that trend line, maybe in 2021, look, that's 2022 about.
Yeah, maybe 2022. If the previous chart that I showed is about right with the US presidential election in November of 2024, if I can get this in the right place, there's November 24 there. So it would be something like that.
Yeah.
And then, of course, something like that. That's when it gets really crazy.
It could really go. So,
Well,
but
I
that's
mean,
pretty insane though. So let's say even they print money and nominally they manage to keep the Dow at 30,000. Let's say like they managed for the end of the decade, it doesn't go to zero. Even if you're at a ratio of 0.2, a quarter of 30 or 45,000, you're getting gold close to 10,000, above 8,000 there for the next 7 years there. Wow, if it
yeah,
goes up there, yeah, that's like that means
it's,
we're really going parabolic. The US dollar is going down the drains at this stage.
it
Or
sounds
yeah,
crazy, but then when you look at what's going on in the US, financially with the central banks, it's not crazy, is it really?
I love this ratio chart. It's so meaningful though.
It's a
But
good roadmap, I think.
yeah,
Um, what other charts have I got here that I was going to show you? So this is the silver chart. Just looking at this individually, and it's having that background of the ratio charts is really helpful, and it's really useful to have a roadmap in the back of your mind. But sort of in more sort of real time, what we're tracking, of course, is what's happening on a sort of a daily and a weekly basis, and where the support and resistance levels are in terms of the current correction. So we can put some lines on here and sort of monitor just where we're going, and the point of doing this, of course, is to know when we break out and when we can be sure that it's safe to start sort of buying more shares if that's what you want to do in silver genius and that kind of thing, and trying to time the bottom as well. I've said for a while that I think the price of silver is going down to $20 or $21. That's a logical stopping point for all sorts of reasons, but we'll have to wait and see what happens over the next few days with the US election. But I think a spike down at some point is highly likely, and with gold down to $1,800 or a little bit less. I mean, it's not guaranteed, and we don't have to see that at all. There's nothing in the rule book that says we have to go down to say 1775 or $19.50 for silver, for example. But I think a panic low, a little bit like the one we had back in March, would set us up very, very strongly for what I think we need to see over the next 6 months, which would be a $500 rise in gold and a proportionately larger increase in the price of silver. So that would be more than 25% rise in the price of gold, call it 30%. Silver up maybe 50%. So you could see silver approaching $40. I think that's what's
100%, right?
yeah. I think
Let's say it
that's
goes
highly
down to
likely. And of course, the
20.
miners would be going crazy at that point.
Yeah. So it's what's hard is a lot of people bought at the 28, 29, fear of missing out. I remember because we know, like you see it on Twitter. But look, that's when you get all the attention. And right now it's pure market psychology. People say like, oh, it's going down the tubes. And the more I hear that, the more, and I saw an article recently, Biden's going to destroy gold price or something like that. And I love hearing that because that's when, like, that's giving you signs that people are starting to capitulate. And it's like rinse and repeat, right? Combine that, but with especially like the price action there. But you're
Yeah.
in the zone, right? Like, can somebody say we could bounce at any time? Is that like me being too optimist? Like,
Well, this could break out to the upside at any point. I mean, there's nothing to say that we have to sort of see the correction carrying on for another week or 2 weeks or 2 months. All we can do is monitor the day-by-day price
yeah,
action and monitor this resistance line, because that's all that really matters. People's views and opinions. It's interesting to debate what may or may not happen, but it's not until this upper resistance line is broken that you can say with a degree of certainty that we're now heading up to new all-time highs, because that's what these chart patterns do. That's what they indicate. Every time you get one of these major chart patterns breaks out, then the price action follows, and we're past the bear market lows now in the gold and silver market. So the upside breakouts will be interesting, to say the least, when the buying takes over, which it will, in my view.
that makes well, the pattern you're kind of drawing out now, and it's typical of silver behavior.
Yeah, it's very
The
volatile, very volatile, and you can
Yeah,
see the silver move from sort of $11 all the way up to $30, and tripling in price, in just a few months, and it can be just as volatile to the downside. So, you know, hold on to your investments in a bull market, because even though you see 20, 30, 40% drops, they're going to be completely wiped out to the upside
yeah,
when the bull market continues. Trying to sort of time your entry and exit in these situations is very, very difficult, but knowing that we're in a bull market means that you can hold on to your investments until they're much, much higher.
totally agree. And like I always remember like the silver long-term chart. I'm really like hope that silver close back to 30, or ideally close a year above 30, because right now like we're still the wick, it doesn't look too nice right now on the yearly chart there for silver. You have a nice long upper shadow there, but it's still very early. So like you said, it could move 10, 20, 30% fast, and this will just be noise in the grand scheme of things.
Yeah, yeah. As you say, when you're looking at the bigger picture, the yearly charts are the ones to look at. I don't know why my screen's just frozen up there. There we go. So you can look at a bigger picture view. Oh, here we go. It's all going crazy now. Try and move the chart across. Yeah, it's not going to show the price action before 2016, is it, for some reason? But talking about miners, you can look at the individual miners, and some of them are likely to break out ahead of gold breaking out over the next few sort of weeks, and some of them, like Silver Bull Resources here, sort of bullish descending wedge, and also other miners in the commodity sector, some of the uranium miners, for example, like Mega Uranium, which has also got a very large arc building out, and has broken out of its long-term resistance line, and is also building out a bullish descending wedge at the moment. So all of this indicating sort of near-term upside is very, very likely. So it's worth just keeping an eye on all the sort of individual mining stocks to sort of decide which ones to buy and when, because they will all bottom at a slightly different time. There we go. So yeah, so if you're thinking of buying back into the mining indices, whether it's I've got a few listed here: Sibanye, Stillwater, Eldorado, there's Yamana, Novo, some of the smaller ones. That was GGM. I'm trying to remember which one that is. Sometimes I forget the names of the tickers.
Granada.
It's Granada Gold, isn't it? Yeah.
Yeah.
And there you go. There's another bullish descending pattern building out there as well, with the stochastic indicator getting quite low. So I think the gold chart, I meant to show you the gold chart as well. I posted this on Twitter this morning, and it's just a reminder that we're not there yet in terms of, I really don't think this correction is over yet. I think there's further to go, because if you look closely at the stochastic indicator here on this longer time view, you can see that each time we're just about to turn up, the indicator levels off just before it turns up. So in real time, you need to see the lines, the blue and the orange line, getting closer together. But if you zoom in and look at it, they're not getting closer together at the moment, and they haven't reached that. I'm not going to call it an oversold area, but you know what I mean. This low zone down here hasn't been reached yet, and if you sort of follow the line down, it's not really due to get there for at least another few days, probably another week to 10 days. So I think we're going to be very susceptible to seeing the price of gold dropping unexpectedly, and perhaps for quite a large drop, maybe $50 in a day, something like that, or more even, anytime in the next week to 10 days. And the same with the moving average convergence divergence indicator, the MACD. You can see that the histogram bars, when they're red, you need to see the bars becoming smaller on here. And as they become smaller, that's an indication that you're getting closer and closer to the start of the next upside move. And when you get the bull cross with the blue and the orange line, that confirms that you're about to see a sustained uptrend. We're nowhere near that happening yet. I mean, that's clearly not anywhere close yet. The red bars here are not getting smaller; they're getting larger still. So caution for the foreseeable future, certainly for the next several days. And I'll be posting on Twitter when these are starting to turn, and at that point, that's where we should be looking for the price of gold to bottom. So I think somewhere, if I had to put my money on it at the moment, I'd say anywhere between $1,750 and $1,800 would be the low. Well, you got any views on that, Patrick?
Well, yeah, the stock and the MACD, like I see them as they're refueling right now, right? So
Yeah.
I want them to see really go down, really reset, and that's going to create fuel. And remember, fuel from higher up, right? Every time those lows that Kevin he circled, the price action was low. As the last time he circled one, the price was at 1480 or something of the sort. So this is all great stuff, man. This is that means we haven't gone parabolic, and we're getting a chance. The market's telling us that we're prepping for another leg up, and we didn't have a blow off top. So this is just refueling, and that those two arrows, is that like around the apex move there? I see Grady do that there. Is that?
It would be, yeah. Well, what I've drawn once or twice on Twitter on some of the charts there is something like this. If I just get rid of the arrowhead, and so you've got that. So you're seeing a false break of the to the downside. I wouldn't say it's around the apex move, because the apex is further off here to the right. So, but what I do think is likely is a false break to the downside, and then a rapid reversal straight back up through through the wedge and straight up to the upside. The alternative would be just to get back in there and then to kind of go sideways for a few more weeks before eventually breaking out. But it depends on what policy statements come out of the US following the election, and just how it all plays into the sort of, the economics and the politics of what's going on. But I think a lot of volatility in all the markets. I don't think that would be surprising at all. I think stock markets are going to be very volatile, and precious metals markets, and but I think the resolution to all of this for both the stock market and precious metals, at least at the moment, will be to the upside over the next few weeks and months, and then we'll see what happens after that.
The exercise you just did, it's good for prepping yourself for those possible. So like your brain's kind of like if the price action goes down, you're not going to start panicking. Which stock should I sell? You already have a roadmap out for it. So I think that's a great emotional management practice there. What we just did there, going through the options.
Yeah.
I like it.
Yeah. Okay, Patrick. Well, it's been really, really good talking to you. I think we've probably covered just about everything we were hoping to. Unless there's anything else you think that needs mentioning at this point, it's going to be a fascinating sort of few days early next week. It's it's a contentious election, to say the least, and I think it's too close to call. I'm just over here in the UK very sorry that it seems to be dividing American society the way that it is. We need America united, not divided. So whoever wins the elections, over here, we're just hoping that the American people unite behind their new leader and don't tear the country apart and cause problems for all of us.
Yeah. Well, yeah, we're kind of spectators here too, right, from Canada.
Yeah.
But it's never as doom as gloom as we think. So I'm pretty much of an optimist there that we're gonna figure stuff out there.
Yeah, I sure hope so. Okay, everybody. Well, thanks for watching. Thanks for listening, and we'll speak to you next time.
Take care, guys. Thanks, Kevin.
Thanks, Patrick.